Welcome to 2025. On behalf of the team at Strategic Wealth Design, I'd like to wish everyone a very happy new year. As we kick off into 2025 and set goals for the upcoming year, I want to share that January is considered Financial Wellness Month. So it's a perfect time to review our financial goals and make plans for a prosperous year ahead. To help you get started, we're excited to share our important numbers guide for 2025. There are many important numbers to know, and it can be a challenge to keep them straight, especially if they change year to year. This guide is 2 pages long and will provide you with all the information that is important for your tax, retirement, and financial planning. So let's dive into it. So let's review the numbers. First, I want to review the federal income tax brackets. The federal income tax brackets have increased by approximately 2.8%. And here you can see the various tax brackets along with where you would fall based on your income, either as married filing jointly or as single. Next, let's take a look at the long-term capital gains tax. Again, the income thresholds have increased for the various tax rates and the filing statuses. What's important to keep in mind is that if you're looking at selling your business or selling real estate or liquidating securities, it's important to manage this tax bracket and certainly work with your tax professionals before you trigger those transactions. Now let's take a look at the Social Security wage base. The Social Security wage base is at $176,100 for 2025. Now this is important because you only pay Social Security taxes up to this number, and anything over and above that, you do not pay Social Security taxes. However, you still continue to pay Medicare taxes, and both of those combined, what you may recognize them as on your pay stub is FICA taxes. So it is important to know this number because if you make over $176,000 a year, it would be important to know the date when you hit that number, and anything over and above that, you're essentially not paying any Social Security taxes, and you have more disposable income available to you that you can apply towards your savings. So just keep an eye out for that number. If your income is over that threshold, then there's some opportunities for you to save more after you hit that threshold. Now let's take a moment to look at the provisional income. This impacts retirees who are currently receiving Social Security benefits and what percentage, either 0, 50%, or 85% of their Social Security benefits would be taxable at retirement depending upon their provisional income and what brackets they fall under. So it's important to know this, and this number has not changed for many years, and it continues to stay the same into 2025. Along the same lines, it's important to pay attention to your Medicare premiums and your IRMAR surcharges. Your Medicare premiums and IRMAR surcharges are dependent upon your income and your income bracket. So important to manage that and speak with your professionals about that as well. On page number 2, you will see information about retirement plans and the contribution limits. Now, for most individuals that are actively saving to retirement accounts, the contribution limits into 401ks, 403bs, and 457s have increased. The contribution limits for 2025 is $23,500. However, the catch-up contribution for age 50 plus has stayed the same as 2024. So the total, if you're over the age of 50, you can contribute as much as $31,000 this year in 2025. Now, something new in 2025 is this catch-up provision for individuals between ages 60 and 63. That the IRS, through Secure Act 2.0, is now allowing individuals between these ages to save as much as $11,250 every year as a catch-up provision. So this is in lieu of the age 50 plus catch-up provision, not in addition to. So an individual between 60 and 63 will be able to save the $23,500 plus the $11,250. Now this is dependent upon your plan, your employer's plan, and if they have allowed this provision. This is a voluntary provision for employers to allow, and if they've allowed for this, then you will be able to take advantage of this as well. So please speak with HR to see if this provision is available in your plan. The traditional IRA and Roth IRA contribution limits have stayed the same as they were in 2024 at $7,000 for anyone under the age of 50, and if you're over the age of 50, you're allowed an additional $1,000 of catch-up provision. The income limits for Roth IRA eligibility as well as deduction for traditional IRAs have increased slightly as well with inflation. And if you're thinking about gifting in 2025 for estate tax or estate planning purposes, the lifetime exemptions have increased as well, in addition to the annual gift exclusion has increased from $18,000 in 2024 to $19,000 in 2025. And lastly, the health savings accounts contribution limits have also slightly increased with inflation. Now that you know about these numbers at a high level, it's important to have detailed discussions with your tax and financial advisors and review the impact of these numbers in your financial life. If you're a client of our firm, please schedule a meeting with your financial advisor to review this in more detail. If you haven't experienced working with us, please feel free to reach out to us or use one of the links on our website to schedule a complimentary consultation. Thank you for watching this video. Have a great year ahead.